Welcome to your Asynchronous Session 6 recording for Business Math A. We're going to talk about Lesson 27, Investing in Stocks. So the objective is that students will be able to explain risks and benefits of stocks, find current stock prices, and calculate the cost, profit, loss, annual dividend, and annual yield of a stock investment. So before we start actually doing some calculations, let's go over some of the definitions. So a dividend is the money earned as a shareholder of a corporation. Loss is when the amount of money received from the sale of a product or stock is less than the amount initially invested. Profit is the amount of money made on a product or an investment over and above the initial amount invested. Stocks is the share of ownership in a corporation. Stock certificate is the proof of ownership in a corporation. So now that we know these terms, let's go ahead and start doing some calculations. So we're going to first talk about buying stock. So here is a stock table that you may see if you're looking at one of the stocks or if you're looking in a newspaper. And you need to know how to read it, what everything means. So we have 52 weeks. The high would be the highest price for one share. The low would be, of course, the lowest price for one share. Stock would be the name of the company. Then the SYM is the symbol. So that would be the, if you're looking on like any of the news stations and stuff, when you see the stocks coming across the bottom, that would be the symbol that pops up. DIV stands for dividend. That's the projected annual dividend for next year based on the amount of the firm's last dividend. The YLD percent is the yield percent, or the percent of return based on the dividend and current stock and current price of the stock. PE is the price earnings ratio. Volume 1000s, that's the number of shares traded during the day expressed in hundreds of shares. High is the highest price paid for one share during that day. The low is the lowest price for that day. Close is the last transaction of the day, what it was cost, and the net change is the difference between the price for the last share today and the price for the last share on the previous day. So whether it went up or down. So that's known as closed. When you hear people talk about the closing price or the closed price and everything, or closed up, that's what it means. So now when we're dealing with stocks, we have two formulas that we can look at. We can look at the cost of a stock is the number of shares times the cost per share. And the total paid is the cost of stock plus the commission if you're going to buy stocks on your own. So let's go ahead and do some calculations now. So our first example, Jason owns 150 shares of Timeco stock, which he purchased at $36.21 per share. He paid a commission of $29.95. What is the total amount that he paid for the stock? Well, the first thing we need to figure out is we need to figure out what was the cost of the stock. How much money did he actually truly pay? So we're going to take the number of shares of 150, multiply it times that $36.21 per share, and we get that he paid $5,431.50 for the stock. Now we want to find the total amount, so we need to take that cost of stock and add in the commission price of $29.95. So we get that Jason paid a total of $5,461.45 for his stock. So let's do another example. Crystal owns 260 shares of Apple stock, which she purchased at $678.51 per share. She paid a commission of $29.95. What is the total amount that she paid for the stock? So remember, first we got to figure out the cost of stock, taking our number of shares times the cost. So she paid $176 for 12.60. So now if we do the total paid of adding in the commission, we get that Crystal paid $176,442.55 for her stock. So that's quite a bit of money. But depending upon different people and different amounts and different things that they have going on, they may be able to pay that much money for their stock and hope that it goes up so that they don't lose money, but they gain a lot of money. So now that we've done a couple, see if you can do this one. So go ahead, pause the video, and see if you can solve for George. Alright, so now that you've had a chance to solve it, let's go over it. So George owns 400 shares of Unvar stock, which he purchased at $58.80 per share. He paid a commission of $19.95. What is the total amount that he paid for the stock? So we're going to get the cost of stock is $23,520. Add in the commission, and we get that George paid $23,539.95 for his stock in Unvar. So now we've talked about buying stock. So now let's do it if we had a table. So if we had a table, like these were 4 companies that we bought stock in, and we want to know how much we paid in total for each one. Well, we're going to first, of course, multiply to get the cost of stock. Then we're going to add in the commission, and we get that it's $11,059.99. for Nelson. So now if we do Galvin, we get that it's 41,360. If we do Duncan, we get that the total paid is 17,845.50. So we're doing the same thing we did, except now we're doing it in a table. So now our last one's a little bit different when it comes to the commission, because it says it's 3 cents per share. So that means we're going to take 3 cents multiplied by the number of shares to get the commission is $75. So we get that the total paid is $156,200 for Warnke Company. Okay, so that's how you do it if you have a table and you're trying to do it. It's the same thing as when you don't have a table. So now let's talk about when we sell stock. So Crystal paid a total of $176,442.55 for 260 shares of Apple stock. She sold the stock for $725.61 per share. She paid a sales commission of $39.95. What is the profit or loss from the sale? So we need to first calculate the net sale, which is going to be the amount of sale minus commission. So we're going to take the amount of sale. Now our amount of sale is we're going to take the number of shares multiplied by how much each share was sold for. So we get that the net sale is $188,618.65. So now we're going to find the either profit, gain, or the loss. So we're going to take that net sale minus the total amount she paid at the beginning. So we get that Crystal made a profit of $12,716.10 from selling her stock. So she did pretty well on her stock. Now let's look at another one. George paid a total of $23,539.95 for 400 shares of Anvar stock. He sold the stock for $56.68 per share. He paid a sales commission of $25.90. What is the profit or loss from the sale? So again, we're going to find our net sale first. Then we're going to go ahead, and now that we have our net sale, we're going to subtract the original investment from it. So we get that George lost $893.85 from selling his stock. So now let's see if you can do an example. So we have Jason paid a total of $5,461.45 for 150 shares of Timco stock. He sold the stock for $36.50 per share. He paid a sales commission of $29.95. What is the profit or loss from the sale? So go ahead, pause the video and see if you can figure that out. Alright, so now that you've had a chance to figure that out, let's see if you were able to get it correct. So when we calculate the net sale and the profit, we get that Jason lost $16.40 from selling his stock. So he didn't lose too much money, so sometimes you may gain a lot of money, sometimes you may lose a lot of money, sometimes you may only lose a little bit or gain only a little bit when you are dealing with stocks. They're very tricky. So now let's talk about stock dividends. So if Jason owns 150 shares of Timco stock, the stock ranged from $30.25 to $39.65 last year. So that's our high and our low from last year. The annual dividend is $150. What's the total annual dividend? What's the annual yield based on the high and low? So first, let's find the total annual dividend, which we're going to use the formula total annual dividend equals the annual dividend per share times the number of shares. So the annual dividend is $150. We have 150 shares, so we get that the total annual dividend is $225. So now we can find our annual yield. Now we're going to find our annual yield for our high and our low. So for our high, we have that it's going to be our annual dividend per share is $150 divided by our cost per share, our high cost per share, which is $39.65. Do the division, and then we want to, annual yield is always a percentage, so we want to change it to a percent. So we get 3.78%. So now if we do the low with the 30.25, now we get that it's 4.96% would be the annual yield for the low price that we have. Let's do another one. George owns 400 shares of Unvar stock. The stock ranged from $45.96 to $61.54 last year. The annual dividend is $125. What is the total annual dividend? What is the annual yield based on the high and the low? So if we find the total annual dividend, we get $500. Now if we find our annual yield for our high price of $61.54, we get that it's 2.03%, and for the low price of $45.96, we get that it's 2.72%. So now that is all that I have for you for this one about the dividends. So here is your last practice problem, which you will answer you'll answer this one in the check for understanding. So go ahead, go back to the asynchronous activities announcement, click on the check for understanding. You're going to enter all three numbers, put them with a comma in between. And as always, if you have any questions, feel free to ask me, especially as we're coming near the end of the course.